Welcome to Bloomerangas podcast. I'm very excited today to introduce you to Andra Bagdonaitė, who is an early stage investor and co-founder at FIRSTPICK, which is a venture capital fund, right? So today we're gonna touch a very interesting topic of how do you create a business that's scalable, that's investable, and that's as much as possible founder independent. So I believe a lot of you out there who are creating your businesses will find this topic at some point of your journey useful. So welcome, Andra. Thank you so much for joining us today.
Thank you for the invite. And it's a pleasure to be here.
Wonderful. So maybe just a little bit of your background, like how did you get into investment and what caught your interest to go down this path?
Sure, absolutely. Happy to tell you more. So I never really planned to become an investor, and I think it's the consequence of being surrounded with the right people and some opportunities opening up for me at the right point in time. I'm educated in economics and politics, actually, and my first job was in the European Parliament, where I was running some projects here in Lithuania to help kids with coding and entrepreneurship education. So I started sort of in the social sciences, social project space. And then in 2016, I had the opportunity to join a management consulting firm here in Lithuania. And I was a part of a team that worked mostly with technology and innovation. And that was a pure coincidence because of my European Parliament experience. People thought that that's the best place to put me because that team was doing a lot of projects with the European Commission as well. So I started there and it was super exciting. We were helping companies like Nanoavionics here in Lithuania, one of the biggest space tech successes, to raise the first grants, to launch their products, their technology, but also did some bigger projects like with corporates, some accelerators and so forth. But the challenge was that we were always like kind of on the sidelines, consulting, like helping the companies, but never really having our skin in the game. Mm-hmm. And I was like eyeing on other opportunities and it just appeared. We had a chance to open up a fund here in Lithuania together with Startup Wise Guys. That's an Estonian accelerator. Mm-hmm. So we launched a fund here in 2019 to invest into early stage companies under the Startup Wise Guys brand. And then along the way, we realized that the opportunity in Baltics is massive and that actually we want to build our own fund. And this is how we started FIRSTPICK in 2023 with the aim to be the first investor for early stage companies building in the Baltics. So, it was kind of accidental and I think it was building up over time, but it was mostly driven by my curiosity in tech in general, in seeing people build something that becomes a part of our daily life. And also the fact that like founders and entrepreneurs, they just have so much energy, so much optimism, and It's a bit addictive.
Right.
You get used to it and you want to stick around. Yeah. So it was really like people and life guiding me along the way.
Wonderful. So you are currently investing, like the entry level ticket is like 150K, right? That's the starting amount that you invest in companies. So what type of parameters does a company have to fit so that they're interesting for you, that they're investable from your point of view?
Yeah, so usually we are the first investor on the cap table and we invest very early compared to other venture capital funds that might invest a little bit later, like in the seed stage or even in growth. So our initial ticket is between 100 and $500,000. So like you said, it can be a little bit bigger, but it's still falls within that range most of the time. And when we are speaking with founders, it can be as early as idea stage. So, someone comes to us, they have an idea and they just want to get advice. Mm-hmm. So we are open to that. But when it comes to investing, typically we're looking for a couple of things. So first of all, a strong team, meaning, maybe 2-3 people, the co-founders that are passionate about what they're building, and they believe that they want to dedicate their full attention to this particular business. The second thing is the product itself. It doesn't have to be built yet in full functionality, but maybe some sort of like initial MVP or proof of concept, something that already is working and can be showed to clients or to end customers. So that's the second bit. And the third aspect that's important is some initial validation. And it doesn't have to be, revenue necessarily, but maybe some early signals that this particular product has demand in the market. So it could be maybe some interviews, some tests, some letters of interest from potential clients, something to show us, that there is commercial opportunity in what these people are building. So this would be the three most important elements, but of course, we look into other criteria as well.
Wonderful. And then the money that you give to kind of kick off the idea, or to, depending on where the entrepreneurs are, that's usually, where does that have to be invested? Are there like certain requirements where you can put it in, or where you can't? How is that structured?
So normally we would ask the company for some sort of budget, to understand how they're going to spend the investment.
Okay.
Of course, we understand that it's built on a lot of assumptions, and as people start building, they might need to adjust the budget here and there. But the budget serves as a sort of structural thinking about the business, where do you need to invest to make this company feasible? And typically these are very regular things, salaries, so founder salaries, or maybe salaries for new employees, development of the technology. So of course a big chunk of that is just developer salaries, but it might be additional things like servers, some infrastructure, computers. These days, a lot of the capital might also go to credits, or tokens for AI businesses.
Right.
And then the third big piece is also sales and marketing budget. So either salaries or also some sort of budget to actually invest into attracting clients. And, final bit is admin, people pay for an office, for travel, maybe for conferences and things like that. So I would say these are usual things that businesses spend on, and we don't micromanage how the founders spend the money, as long as the results are there and we see that it falls into this budget that we have agreed upon, then everything is okay.
Wonderful. And do you then structure the milestone that needs to be reached thanks to this money? You, I guess, both work together, right, to define what would be the results that you are going after, right?
Yes.
And what would be those for? Can you give us some examples?
Of course. So the way we think about it, in startups and in venture capital in general, the first investment is never the final one.
Right.
So typically a company raises multiple financing rounds as they keep on growing to invest into scaling the business further.
Right.
So the way we think about milestones is based on this financing flow and logic. So basically when we meet with founders, we talk to them, okay, what is the milestone you need to reach to be able to raise the next round of funding?
I see.
So usually it's attached to that. And depending on the business model, it can be quite different. I would say that most of the time it's related to revenue and clients. So for example, you need to reach 100K in monthly revenue in order to be able to raise let's say 3 million as your next funding round.
Right.
And then we try to break it down, do the backwards calculation, to reach 100K, how much do you need to have, how many clients, how fast do you need to grow?
Right.
And we try to adapt the strategy as the founders start building to see, okay, is this reasonable? Can we actually reach this milestone? Do we need to adjust?
Right.
Do we need to adjust our funding expectations, and etc.?
Wonderful. So is this something you do together with the founders, right? Or would you expect the founders to have figured this out more or less themselves? How much of this business strategic thinking would you expect the entrepreneurs to have because a lot of the times, at least from the tech teams, the entrepreneurial teams that I've met, not everyone has a very strong business thinker. They are very often the creators, right? So how much of that would you expect to be in the early founding team and sort of?
Yeah. So two things here. On one hand, there is, this understanding of how venture capital works in general, and like what are the specific milestones that you need to hit to raise the next round of funding. So this is the place where we provide most help, because we see that, like, especially in Lithuania, for example, or in the Baltics where we invest, not every founder understands venture capital and how to attract investments. And this is something where we educate a lot, and we try to work together with the founders to really help them understand, what are the rules of the game, and and what are the requirements of investors in later stages. So with this part, we do help quite a bit. When it comes to the business part itself, we do provide support, but I think it's quite important that the founders understand their clients. So not necessarily, have the whole plan already in place, but at least understand, who am I selling to? What problem am I solving for these people or these companies? How much can I potentially charge? Is it, like hundreds of euros, thousands of euros? How can I reach those clients? How many of them are there? To have like an overall understanding how big this business can become. Because sense. It can be quite small. Maybe I'm servicing like, I don't know, 10 clients, and this is it, because my service or product is so niche. But maybe I can have like a more global product, and the opportunity is bigger. So there we help the founders, but I think we expect them to have like an overall feeling of what the business opportunity could be. Right.
You need to know the waters you are swimming in.
Exactly. Because in the end of the day, you will be the one, trying to sell to those clients. So if you don't really understand them, it can be quite challenging, unless you're building like, I don't know, a product that is sold directly through marketing and through ads, Then you need to know how to do performance marketing. Not so much like to understand the client profile necessarily. So depending on the business, you might also need different skills. And we know that, people are not experts in every field. But then what we expect the founders to do is to attract top talent, to attract people that have the right expertise and that could help them build the business.
Wonderful. And then in terms of the business model, in order for it to be scalable and in a way founder independent to the level that's possible to be that way, what are the businesses that are interesting for you? I know you said you've been in tech most of the time, so that needs to be software as a service, right? I guess one of the business models. Are there any others that you're considering? And how could a creator who spots an opportunity, or sees that this could work, how could they think how to structure their business model so it is scalable and founder independent? So we are a generalist fund, so we invest quite broadly. Like you said, most of the companies have a technology element, and this is because otherwise it's very difficult to scale. Like, you might be doing an amazing service, but as long as it's dependent on hiring more people to service more clients, then the scalability is limited. So in the end of the day, you need to have some sort of technology element to be able to scale that business. So that's why we primarily look for technology companies, and this can be quite broad. So software as a service, for sure, that's one model that we like. But for example, we have backed Tingit, a Lithuanian company that is doing repairs for clothing items. So they provide the technology that enables end customer to get access to repair shops and repair the items that they love, giving them an opportunity for a second life. So that's more like a marketplace model,
it's the marketplace model. But in essence, it's maybe not directly as tech as you would think, because what they do is they provide the connection between the end customer and, and the repair shop, but they don't necessarily like have some sort of software or app, you know. It's not based on that. It's more based on the whole supply chain sort of management, right?
It's a little bit like treat well what they do.
Exactly. So I think the opportunities in technology are vast, and people sometimes forget, you know, how many opportunities exist there. But in essence, we invest in both like business to business solutions, business to consumer solutions. So it can be software, apps, platforms, marketplaces, sometimes even hardware or other devices. Another company that we have backed called Samfire Neuroscience, they are building a medical device for women to help with PMS syndromes. And in essence, it's a hairband that you put on top of your head, and it stimulates your brain through neuro impulses, helping with some of the emotional and physical pains that women experience every month. So, you know, it can be like quite complex in terms of the technology, but it can also be, like I said, you know, business model innovation, or more like apps or software. So we invest quite broadly, actually. And I think for creators, especially right now, like there are so many opportunities to build interesting things. Because you no longer have to have very strong technical expertise, at least to start building and start validating, prototyping, exactly. So, you know, companies like Hostinger here in Lithuania, but also like Lovable or Cursor, they have these tools that enable people to build something just by, you know, texting. So you don't need to know how to code anymore. And I think this is like especially important for creators, because it enables them to turn their ideas into reality without having, at least in the beginning, a strong technical person in the team.
Right, wonderful. But at some point, especially if it's a tech business, right, there needs to be a technical person full-time in the team, right?
I would say yes. It's quite important. And usually when businesses start, you know, they have two key people. One of them is kind of the business person, and the other is more like the technical person. And in essence, like vibe coding and all this, you know, new wave of creating products, it enables people to test ideas. But if you want to really like build a good working product that's safe, secure, reliable, at some point, you just need a technical person to take over, because these are still like tools that you can play around with mostly.
When you are investing in early stage, is that a must to have a technical person on the team already, or is this something that can be brought in down the line? Hi guys, I just wanted to send a quick reminder that we have just launched a new subscription, and if you are looking to unlock creativity in a variety of formats, get access to our digital tools and online creative sessions, check us out. I hope I'll see you inside.
It can be brought in down the line, I think, yes. So when companies start, typically they choose between a couple of options. One is, yes, they already have a strong technical person, and then it's fairly simple. The second option is when they outsource the development in the beginning. So maybe they work with like a tech development company that helps them build the product. Or maybe it's a single founder, like one person, you know, more this like visionary person, the creator or the business person. And then along the way, that person hires, you know, someone to join the team, and not necessarily as a co-founder, but it can also be as an employee that has like good motivation through the stock options, and it's like, you know, critical to the founding team in that way. But yeah, it's also an option.
Yes. So a lot of our listeners and watchers on YouTube, right, people who are around us, they have creative businesses, right? So like a design studio, or maybe even a design studio that has, you know, 5 studios under it, right? But it's still a business model that's dependent on people, right? So it's not that scalable from your perspective, right? Unless you hire more people. So have you ever had experience coaching an entrepreneur, working with an entrepreneur, maybe not now in the fund you have right now, but before, of how you transform this, let's say, people-centered business model into more of a tech-based business model that's more scalable.
Yeah.
Are there any tips for anyone willing to go down that route to think about?
Yeah, it's a good question, and I think in general, when you're thinking about building a business, venture capital is only one of the options, right? And it's not necessarily the best option. Mm-hmm. I think there are a lot of people that are building extremely good businesses that are, non-tech and that are not necessarily scalable, but that create a lot of value and they can be profitable, they can generate a lot of revenue, and actually can be, a lot of fun to build and to manage, because then you are your own boss and owner, and there's no one else on your cap table, and you don't have anyone to report to. So there's a lot of beauty in regular businesses, and I wouldn't push them out and say, you need to go for this necessarily technology. But if you're considering,
that sort of global reach and having a really not needing to that speed, right? It can be attractive.
Yes. If you are considering and if you're curious, I think there definitely is an opportunity to either transform the existing business or to start something completely new based on the experience that you as a person have collected along the way. And I'm not sure which path is easier, actually. And sometimes it can be easier to start something completely new as opposed to trying to transform the business. Yes. I have seen successful cases where companies that are, let's say, a bit more in the service industry start building a product. So for example, in Lithuania, there is the Synthesis Group.
I know them. Gediminas Užkuraitis.
Yeah, exactly. So they do many things, from web development to brand creation to multiple services. I think PR as well.
They were considering at some point doing a product. I don't know if they went down that route.
So they have built an internal product for themselves to scan competitor behavior and to do competitor analysis. And then they thought that this is a type of product that could potentially be sold to clients. I don't know if they actually ended up doing it or not.
Like a spin-off, right?
Exactly. But this is like one of the examples, how you build something internally for yourself and then you realize, this is actually something that I could also sell to others.
Yes.
So I think this is an interesting path, and this is how normally spin-offs inside companies are created. And I've seen it with in data companies as well, where, they build some specific workflow inside the team, and then they think, okay, this is something that we could scale and sell, or in other consulting firms also. So this is doable. This is one path. But sometimes I think as you are operating in a specific space as a creator, maybe you have 5-10 years of experience, you've seen how clients operate, and you start seeing some patterns and some problems that can be turned into opportunities. And this doesn't necessarily have to be directly related to the core business, but it can come out of the activities that you do and the services that you sell. And then maybe, you say, okay, let's leave the service business. Maybe you close it, maybe you keep it running, you hire maybe a sort of project manager or someone to manage it, and then you focus on this new thing.
So the key, just you said, and I love that, is to identify the patterns that keep repeating among clients. So then you can spot that this is probably a repeatable problem in a lot of people. And then it's a matter of finding a solution that's technology driven, therefore to make it scalable.
Yes, exactly. Because these are in essence two things that you need for scalability, right? The technology itself, but then the fact that there are multiple clients needing the same product. It can, be maybe customized or adjusted a little bit, but in essence, you need to spot this repeatable pattern among multiple companies, because we also see this issue that sometimes, when startups begin, they find a big client, a big corporate, and they see, this corporate has this problem, I'm going to solve it. But then it ends up being the problem of the single client. And then it's not scalable, even though it's a technologically based product, it's not scalable.
And going back to the example you said of service companies who are creating products for themselves and then thinking to spin it off, it's also like I've had a similar situation when I was running the brand agency I mentioned to you before. Like I created one tool, I got even investment for it, but for the first iteration, the mistake I did was that we made it too specific to our own needs, like to the way our team worked, and it wasn't maybe general enough to work for other agencies. So we had to kind of redo the product from scratch. But that's also something to think about. Of if you spot your own need, it doesn't mean that all other agencies or other businesses will also have the same need. So it's very important to spot those patterns first across, and then see how you can solve it in a general way and not too specific for one or two clients.
Yes.
Because you end up still being then in the service business, just in software development business.
That's right.
You're doing a software.
But it's also a natural journey. Like you never build a product on day one that's going to be fully functional and that's going to serve all of your clients' needs.
That's a good point.
Something that we try to teach, founders when they start building is to get out there and start testing the product as early as possible.
Right.
Like you should be almost ashamed of how the product looks.
That's a good one, yeah.
In order to really to really understand what my clients need. Because,
right.
You might think, oh, these features and these features, that's going to be amazing. I would love it. So they will love it as well.
Right.
And then you realize that maybe they need, like the problem is there, but they need a slightly different solution.
Yes,
so
a very good point.
This should go like hand in hand, building the product and iterating with the clients. And it's a never ending process because a product is never finished fully.
Yes, exactly. So I love that because yes, I've been in that myself, and with the clients that I work with, the people are really looking for that perfect version, right? Mm-hmm. Which never comes. Or if you launch the perfect, it's almost too late, right? Yes. There's the saying. Exactly. So indeed, it's a matter of co-creating with your clients, right? And that's exciting because then you're not doing it on your own in a way. You're growing together and you're serving the clients, and that's the best way to create a useful product, right?
Exactly.
So in a way, just to summarize on what we were saying, from service businesses switching to a scalable business model, it's kind of you're switching from a service business, meaning you sell your time, to a product business. I mean, you're still serving through a product, but primarily it's like a core, clearly defined value, right? That you've packaged in a product which you can sell through multiple ways, right? But primarily is that it's clearly defined and can be useful for a lot of people.
Exactly.
Correct?
Exactly. Yeah, that's a very good summary. And it's a
mindset change that also has to happen, right?
Yes, it is a mindset change. You're right. It's, a lot of people in the service business, like their output is what they create,
Yes.
Like my hours as a person, like my professional output is something that I sell to others. Right. And you need to switch from that mindset of like billing hours into, okay, like this is something that I give to you as a full package, like you said.
I'm renting in a way that to you.
Exactly,
right?
exactly. Yes. And then my hours as a business manager can be used for other things, selling, hiring, building the business, thinking about the vision, the future, not so much about, actually doing things with my own hands. Yeah.
Yeah. So that's the dream for a lot of entrepreneurs to get out of that rat race. Even though I'm sure creating a product business is not an easy ride as well, but it's more fun, right? Or there's more freedom. Well, I guess that's also kind of subjective in a way, because
I think both are a lot of fun, and it's really fun to create because you love it. You put something in, you get an output. It's different every time. Creativity is sparking a lot of ideas. So it can be really rewarding. And I think as a creator, normally you probably have a closer contact to your client.
Right.
So that is also providing a lot of motivation and in general like good emotions.
Yes.
If the project is good,
yes,
of course.
Yes.
But with the product led business, as a founder, you probably start to experience a different level of growth. Because as a creator, you are more of a specialist, right?
Yes,
you
exactly.
can become like exceptionally good in your specific field, and you become this like specialist that people respect because of your knowledge, your experience, etc. When you become a founder of a product-led business, you grow more as a manager, in my opinion. So, you start to learn, okay, like how do I run this company? You need to start learning about hiring, about looking at competitors, thinking about the product, its vision, many different things, but it's a different path, the path of a specialist versus the path of a manager,
a founder. Even though a specialist, right, can transform into a founder over time, right?
Yes, absolutely.
Yeah, but that's also another life.
Yeah, it's another
Some
life.
hate that. Some people really hate that. It's like within companies, within teams, some people don't want to become team leads, right? Because they prefer to do their own thing. They don't want to manage a team, and it's just too much.
And
right?
I think this is absolutely okay, because if everyone was a manager, then what would we do? So it's not necessarily a better path. It's just different. Like, and if you want to explore it as a creator, I think it's always open for you, and it's always there. And you can also always return to the different role if you don't like it.
Right.
But now, especially like since the beginning of last year, I think what we've seen with this AI wave, this is really like an incredible time to try and build something. And so many strong headwinds are supporting founders today. Mm-hmm. The fact that it's much easier to start building and start testing ideas. Right. In the past, you need like big budgets to develop an MVP to even get going. Whereas today, like, you can sit down for a couple of days and play with these tools, and you can build something. Right. And I think if you are a creator and if you haven't tried it yet, like, you really should. Right. It's eye-opening once you start to see, how your like words and sentences turn into a product. It's an incredible experience. It's amazing. For sure, it's something to try out. And then the second thing is that because of AI, there's a huge need for both businesses and consumers to adapt. Everyone is afraid of falling behind. And so they're willing to try out new products. They're willing to invest. Right. And this opens up big budgets and organizations, but also in customer pockets for people to tap into. So, so everything is there. Like if you're a creator and you ever wanted to try building a product business, I think there was never a better time than right now.
Yeah. And wouldn't you agree that kind of creative thinking of that human creativity is super powerful now? It's like that can be put into productivity so fast that, you just need to have ideas and know how to work these tools through, right? And put them to use in the way that would make your ideas come to life.
Exactly. So, a lot of people, when they think about like startups or founders, they think about really young people, like straight out of university, starting to build something. There is that image. But if we look at the most successful founders, they're actually in the age bracket of 35 to 45, meaning that
you have some experience already.
Exactly.
You're more mature.
Exactly. And this is because experience, yes, but also the fact that in order to come up with interesting products, you need to know what is happening in the market and what are the pain points.
Right.
So for a lot of young people, like fresh out of university, they do come up with really, really exciting ideas, but often they lack context and lack substance.
Yes, I've had that experience.
Yeah, and even though you have a lot of talented young people that, you know, are building these like vibe coded products, they're usually like very thin, very niche, and they lack like the substance to become into fully functional big businesses. So that's why, like, if you know, if you are a creator and if you've been in the space for like several years, you have a much better understanding of what could be built potentially, because you've seen what's happening in the market and what the clients need.
So that's a great encouragement.
Yeah, for sure.
Because a lot of people, they think, oh, this is like for the young ones, right? For the young ones.
It's a misconception, and the reality is a bit different.
Yeah, well, that's wonderful to hear. I've had experience working with like very young people here in Lithuania, like 23, 20, up to 25. And yeah, it's amazing. The energy is beautiful. I love it. But sometimes you feel like, oh my God, like, yes, your ideas are great, but you know, then you have experience, you know, that won't work, or that's just like, wow, that's just ages to implement. And then you think, no, it's not worth it. So, but if you are able to merge, right, that beginner's mind with some experience, then it's a great combination.
Yeah, it can be an amazing combination. And for sure, we've seen a lot of really ambitious young people now building, and I think it's such a great inspiration, because, you know, they like you said, they have this beginner mindset, and they're not afraid to go big and to go all in, and they're not
because you don't know what where you're getting into.
Yeah. But they're also not satisfied with this like mediocre outcome, and I think it can be a good driving force for a lot of people. So one of the like biggest success stories that we had, at least here in Lithuania this year, was Sintra AI. It's a product that actually is built by founders of a digital agency. So, you know, they've built an agency before. They mostly help with e-commerce companies with like marketing and with ads. And then they saw this like AI opportunity of building prompts and then later turning prompts into AI agents. They were very early to the game, but they grew like incredibly, and they grew to 15 million in annual recurring revenue in less than a year. And they raised the biggest seed round in the Baltic states, 18 million at the end of the year. So, you know, an incredible story of how young and ambitious people can build something that's really valuable, that is, you know, adored by their clients, and also like recognized by investors. So
wonderful.
So I think it has really inspired a lot of people to start building, because they saw like, okay, you know,
I think in this region possible. There is that still thing, right? Like if you're in US or Western Europe, it's like already in your blood, right? You know it's possible. But here, I think in our region, like we've already seen examples, very successful, like unicorns, right? So I think we are starting to believe that it's possible, but it still needs to be more talked about, I guess, right?
Absolutely. But you know, you have to remember it's a young economy, like
very much so.
Over 30 years, whereas, you know, like
we're doing great for that matter.
Exactly, and we're doing great. And we just released a report on the funding in Baltic states, like, you know, how much capital was raised and which companies it went to, and also compared it to the Nordic states. So actually, Estonia is still a leader by capital invested per capita, and then Lithuania is the third one. So, you know, in terms of money coming into this region, we are ahead of Sweden, ahead of Finland, ahead of, I think only Denmark is this. Yeah, Denmark was the second. So, you know, we're looking really strong in the region, and
wonderful.
And that's why I'm saying it's a good time to build. You know, people are excited. They want to invest into this region.
Wonderful. And let's talk a little bit about marketing, right? So, of course, when you have an idea for the product, you build the MVP, you get it online, right? Let's say, and then what? Right? sort of in order to reach the scale, like you just mentioned, right? For Sintra AI, for example, like how much needs to be invested in marketing, right? In order to get that visibility, right? To get all those customers. And of course, if it's a great product, word of mouth does do also its job, right? But you need to put in the fuel, right? Which is usually what? Money in ads, or what gives that acceleration in the companies that you've seen that grow so fast, that is really could take the company to substantial level.
So the marketing budget, it really depends on the business model, of course.
Right.
You know, if you're building a business to business tool, then the marketing budget will not be as high, because most of the sales will be done by salespeople or by the founders themselves, actually reaching out to clients, you know, setting up demos, doing calls, and then converting them to paid customers. So in those cases, the marketing budget is there to maybe build trust, credibility, maybe for content marketing, but you know, this is like writing texts, improving B2B SEO. So there the marketing budgets are typically lower. But marketing budgets are especially relevant for direct to consumer products or products that are targeting SMBs. So like smaller clients, you know, that pay maybe like up to 100 euros per month for a particular product. And in those cases, what we still see is that in the beginning, like ad spend is the most important thing, because organic growth is important, word of mouth is important. That's a very strong signal that, you know, the product is good and customers actually refer the product to each other. But growing organically is just slow. So it will take time to build out an audience that's large enough for the network effects to kick in. So typically in the beginning, you need to have some sort of ad budget, and there it really depends how big it needs to be, because what you're looking for is good metrics. As soon as you hit this, there's this like golden metric called ROAS, basically like revenue on ad spend, like the dollar coming back from each dollar invested into ads. And once this metric exceeds 1, then it means that every dollar you spend is bringing you more money back. And then, you know, it's a positive effect, because you're earning on what you're spending. So it's quite like specific and actually very data driven. When you think about marketing and advertising, one part is the creative part, the one that gets the client excited. But the other part really is like the numbers and the data and understanding how to effectively spend the budgets. So what we see in practice is companies building out the marketing budget. They start with smaller budgets, trying to get to those good metrics. And once they hit them, they can invest more, because then it means that, you know, the money is used effectively and provides a good return on investment. So the power still lies in the ads, right? For consumer-facing businesses, yes, I would say that it does. And of course, it's becoming difficult to compete only on ad levels. So companies also think about influencers, about some viral campaigns, about building brand in general and standing out. Because if it's only based on the ads, at one point in time, you know, you have a problem, because you turn off the marketing budget and no more new clients are coming in.
Yeah, that's the problem with ads.
So it's a good fuel in the beginning, but then you need to think about more strategies and the whole marketing mix.
Yeah, makes sense. And when we were talking about the business model, I wanted to ask this question of like, when you mentioned kind of building a product that sticks, right, is an iterative process. But how much of time how many times do you keep on iterating? Like how much to give that, you know, to let the hope live that it's gonna work, and when to stop it, right? Because of obviously creativity, you know, if you're a creative person, you'll always come up with ideas of what to do. But at some point you might need to step back and say, maybe this is actually not working, and I need to either, you know, completely transform things or whatever. So from your experience, what is sort of a healthy way, a healthy period of time to keep on iterating, right, in the direction you're going, and when to pull the plug and say, hey, okay, that's it?
Yes, it's a good question, and sometimes it's important to stop earlier than to drag it out. But in general, I think a good rule of thumb would be trying to get to revenue as soon as possible from the product that you have. Right. Meaning that, when you are building and you're maybe iterating with clients, try to get into this at least pilot or test phase, at the end of which there should be, some revenue coming out. Or if you are maybe building a consumer-facing product, then also getting those first users, first metrics, and then seeing, okay, can I convert them into paid customers? Because as soon as someone starts paying for something, it means that there is value for it. And then, the next challenge becomes, okay, how do I scale that value from a single consumer to multiple consumers? But usually willingness to pay is the strongest signal. And if you're building and building and building and there's no one willing to pay, most likely it's not gonna it's not gonna become a fully functional business.
Yes, but that sort of payment thing also, like from what you mentioned, you need to also understand like how many people are willing to pay. Like, is this an opportunity for bigger business, or is this like a very niche small one, right? So from you as an investor, when let's say an entrepreneur comes up with numbers and say, hey, yes, we have clients, this is where we are, but like, what is an interesting number that already is giving that signal that this could be worth your time or worth your investment?
So normally we would expect them to think a little bit about how many potential clients in theory
there are overall.
Exactly. So, like if you're building a very boring business, but for example, procurement management software, how many companies in manufacturing are there that do procurement that could potentially be your clients? So this is the, kind of market research approach, looking at realistically how many clients could there be. Another route is to look at comparables, to look at competitors, because there are always competitors solving the same problem, maybe not with the exact same solution, but at least with something that's, quite similar and that maybe can become better. And looking at competitors is also a good way to identify that, okay, this is a problem that exists and potentially can be quite big because they are, generating revenue, growing, etc. So I would say two things. One is market research, like thinking realistically how many clients there could be. And then the other, looking at comparables, market players, and whether there are other companies solving the same problem.
Right. Wonderful. So maybe my last question will be about your brand, right? The FIRSTPICK brand. Since a lot of our listeners are designers, design branding agencies, just from your perspective, how has branding worked for you in order to find your way in the market as a VC fund? And I love your website.
Thank you.
The reason why we invited, I thought, colors, it's really something different. So it's great. I love it. It's simple, it's very solid, but there's life in it, right? It doesn't bring this image of an investor that will grill you, which is the phrase I often hear from tech entrepreneurs. So, can you share a little bit how you went about creating your brand when you were launching the fund?
Of course.
And you did it yourself, right? From what I understood.
We did it ourselves. We had help. We worked with a freelance brand consultant that, helped us shape the brand, but it was an activity that we did together as a team.
Right.
When we started thinking about FIRSTPICK, we thought, okay, you know, who do we want to be? And how do we make sure that our brand is a reflection of who we really are as people, and it represents our values, and there is no dissonance, you know, between what we communicate and how we act on a daily basis. So we wanted to make sure that this is in line. And I think maybe that's why the brand turned out to be quite strong, because it was always about us as people, you know, not something, you know, based
imaginary,
on trends or something imaginary, right? So the first and most important task was to come up with a name. And here, you know, we have brainstormed for like days and hours, and we were lucky to finally come up with FIRSTPICK. It was suggested by one of the companies that we have invested in, by one of the founders. And we thought it's such a cool name because we are usually the first to invest into companies, and we are the first that founders pick, you know, as their investors. So it was sort of like a nice play of words. And then after the name, we started building the brand, and we thought, okay, we want to make sure that the brand is alive, that we don't look like another investor, you know, because a lot of venture capital investors, they come from the financial sector. They have this like, you know, trust, blue color, very clear tone of voice, you know, very professional. And we thought, okay, this is not who we want to be. We want to stand out, and we want to be alive, young, fresh. We want to look approachable so that people could actually come talk to us even before they think about fundraising, to start building those relationships.
Wonderful.
And we also wanted to incorporate this element of speed, you know, that we can make decisions fast, be it good decisions or bad decisions, but that we value the founder's time and we want to be honest with them. So based on these like values, and this was a big exercise, you know, everyone from the team was involved, but based on those values, we started looking for a visual identity that would match it, you know, something bold, something standing out, and naturally like the colors were selected based on this, and the rest, the tone of voice and everything. So it was an interesting exercise to first think about the brand that we want to build, but then also to fulfill the expectations of the brand in reality. So everything that we do, all the activities, the events, our marketing stunts, you know, everything is built around that to make sure that there is consistency.
Yes.
And I'm very happy with how it turned out to be. And even today, like, you know, it's almost like 5 years since we started building the brand.
Right.
So even today, it doesn't look outdated, and I think that's a sign of, you know, a strong brand.
You haven't changed in 5 years. That's great.
No. I mean, you know, we've built it in iterations.
Yeah, but the essence of it, right?
The essence of it, it hasn't changed.
That's great. Yeah, I think that a lot of, I mean, branding can help, right, to kind of help you look different in the market. But if you're changing too much, that's like a bad side, right?
Yeah.
It's like you're not grounded in what you're doing.
Exactly.
So, especially if you're an investment fund, that will be a red flag, right?
Yeah, exactly. Like I said, I think it's, you know, a strong brand, it has to be aligned with everything that you do. Even I mean, basic things like how you hire people, how you interact as a team, how you communicate. Even like internal things are a part of your brand. And if they're not aligned, then in the end of the day, something's going to fall apart. You'll have to change the brand at some point in time.
Yeah, love that. Yes, I very much agree with you. And I remember now my brand agency years, how many times I've worked with clients who want, as I called, you know, sometimes wannabes. Like, you want to be that way, but you're not that way, and you're not going to maintain that, right? So yes, we could do branding, but you know that it's not going to really, you know, last. Those are the frustrating parts. Every business, you know, every baby comes with diapers, as they say. So, but when you get a client who really kind of has already crystallized who they are, and they know what they want, it's very solid, right? So going back to the founders between 35 and 45, usually that's people probably already in that phase, right? Where
they tried a couple of things. They know what they want. They know what they don't like. They're true to themselves.
I understand. Well, thank you so much for joining us. I really enjoyed our talk. And we explored today a very different angle of creativity, right? Which I think monetization and making a useful business and a scalable business is part of creativity, right? So of making that tangible in life. And for creators, it's important. If we want to kind of stay creative and keep on creating, it's important to find a format, right, that would work personally with you. So like you said, for a lot of businesses, service business is perfect. And yes, for some businesses, product business would be great. So today we explored what that means, right?
Yes, exactly. Thank you so much for the conversation. It was a pleasure.
So if somebody would want to talk to you, right, like a company, do they have to be in the Baltic states or in Baltic region, or it can be someone from further away, or is that a criteria?
It's our primary thesis to invest in the Baltics, but I'm always open for conversations with interesting people. So no matter where they are, they can reach me. I think the easiest way is through LinkedIn.
Right.
I'm quite responsive there, so just drop me a message, and happy to chat.
Yes. So if you're watching us on YouTube, you'll find links to Andra's LinkedIn in the comments. If you're listening us on the podcast, please go to our blog and you'll find us there. It's creativity.bloomerangas.com. Thank you, everyone, and we'll see you the next time. Hi guys, I just wanted to send a quick reminder that we have just launched a new subscription, and if you are looking to unlock creativity in a variety of formats, get access to our digital tools and online creative sessions, check us out. I hope I'll see you inside.